All right, welcome back. We got our stock market update for the week, and we got a lot of green to go over today. We have the S&P 500 at an all-time high, crossing 6,000 this week. Very strong push here, strong breakout. And the Dow Jones also all-time high, very strong breakout here. When we look at the small caps, they are approaching their all-time high. Looks like their peak was back in 2021. So it's been a while since we've seen these levels. Very strong recovery here, and we're getting back up towards the all-time high. We'll see if we get there within the next few weeks, but the small caps doing really well. NASDAQ technology breaking out, all-time high as well. Another strong week here. And then when we look at gold, gold took a little bit of a break this week, but in a strong uptrend still. Crude oil not doing a whole lot, just chopping along sideways here at 70 bucks. Seems like it'll sell off a few percent and then recover the next day and then sell off. So it's just kind of chopping along sideways. It was an interesting week for interest rates. We did see, let's zoom in on the daily, we did see a big move up on rates during the election. And then we've kind of sold off since then. So it'll be interesting where rates go from here. The Fed did cut their interest rates this week. So they did cut 25 basis points, bringing the Fed funds rate to a range of 4.25 to 4.5. This decision aims to support economic growth amid signs of slowing inflation. So we do get the inflation numbers. Let's pull up the calendar. Next Wednesday, we have the CPI numbers, month over month, year over year. And then we have the PPI numbers. And then Jerome Powell will be giving a speech as well. So it'll be an interesting week next week to see where inflation's at. I'm in the camp that inflation has cooled quite a bit. Prices are still high and they're going to stay high. Asset prices are still high and they will most likely stay high unless we get a recession. But the price of eggs isn't continually increasing. So we're seeing the rate of increase slow down, which is good. That's what the Fed wants, but prices are still going up. They want prices to go up at 2% a year. That's their goal. So prices are still going up. They are just slowing the rate at which they're going up. And you are seeing some things like oil, some metals, some materials that are drastically down from their peak and they're no longer rising. They're kind of staying steady like we saw in oil, which is good for the consumer. And that's going to keep prices a little bit more stable. So I think that's what the Fed is saying as well. They're saying, okay, inflation's kind of really moderating here, and we're seeing growth start to. Growth is still strong, but it's not. We're not overheated. So let's bring the interest rates back down because they want interest rates to be close to the rate of inflation. If there's too big of a spread there, that's a very restrictive stance, and that they risk of tightening too much and breaking something. So that is the stance of the Fed. And so I do think they're going to keep cutting rates. At the pace of which they cut rates, we'll see. We already saw that they did. The first cut was 50. Now they've already slowed down to 25. There's a possibility down the road, if they see inflation numbers that they don't like, that they skip a meeting or two, which is okay. The economy would obviously be able to handle it until there is some softness in the economy. Then they can speed up the rate cuts if they needed to. So Fed's in a good spot to put out the fire of a recession. What they don't want to do is all of a sudden inflation comes roaring back, and then they would have to possibly stop cutting altogether. That's not what they want to do. So I don't think that's a huge risk. You'll hear people talk about that, the risk of inflation coming back, especially when the stock market starts ripping like it is. That may give people a little bit more cash in their pocket, a little bit more confidence to go out and spend. But I do think a lot of that inflation we saw was pandemic related, stimulus checks, PPP loans, supply chain. It was almost like a perfect storm. I still think people have to go to their jobs. It's not I'm a golfer, and it was impossible to find a tee time on a Wednesday afternoon. You could not find a tee time because nobody was working, but everyone had money and everyone was out doing whatever they wanted. I don't think we're back at those times. So, anyways, my little inflation rant. We'll see what the numbers look like next week. But the Fed did have their meeting, cut rates, and one thing when it comes to interest rates, they did talk about the increase of interest rates because the Fed is cutting rates, but as we're seeing here, interest rates over the last couple of months have been on a tear to the upside. So they did talk about that, and that is the market sending the signal. Either two things: the market is saying they're expecting higher inflation, so they don't want to hold bonds, or, and I'm starting to lean into this camp because, as you just heard, I don't think there's a huge risk of inflation ripping back up to where we were a few years ago. This is also the market saying we're expecting a lot of growth. So let's get out of bonds and let's increase our allocation towards stocks. Now look at the stock market, all-time high. Stocks are ripping. And I think that I'm in that camp. And that is one thing Jerome Powell said as well, is he is seeing this rise in interest rates. The bond market is saying we're expecting more growth over the next 10 years, more growth than what was expected previously. And maybe that is going to be something to do with this new administration. We'll have to wait and see. So I'm a little bit in that camp when you see the things that are going on with AI, automation, and the potential for maybe less regulation and a government that is willing to throw money around and make some deals. So I'm in that camp that I think we're going to see a little bit more growth. If you were in an 80-20 portfolio, this is just an example. Maybe now you're in 90-20 portfolio, 90% stocks, 10% bonds. So you reduce your bond position and you increase your stock position. That would make the stock market go up and the yields go up, and that's what we're seeing. So I think there's a lot of money managers out there that are doing what I just explained to you. So I hope all that makes sense, what I just mentioned when it comes to interest rates and the stock market. Let's take a look here at a few individual names, because we do have record highs in the indices, as we talked about. We do have record highs, all-time highs in a few stocks. Not a few. There's a lot of stocks that hit all-time highs. I think 24% of the S&P 500 hit all-time highs this week. Some stocks that I own: Tesla, Amazon, Nvidia, all-time highs. Bitcoin, all-time highs. And one little piece of news on Nvidia: it did replace Intel in the Dow Jones. I think today was the first day officially. So that's great if you own the Dow Jones, because there's a few stocks in there that are just dogs, like Intel, dogs. So it's great that they can take out the dogs and put in the winners, like an Nvidia. So that's great to see for that index. And let's go ahead and take a quick look at a few charts here, because some of these moves have been unbelievable. Actually, before we look at individual names, boom, there's the heat map. This is the heat map for the week. I'm blinded by this. This is just very green. So some big names here. You got Nvidia up 9%. You've got Amazon 5%. You've got the oil stocks looking good here. And then if I move my head here, we've got a lot of the financials doing really well. So JP Morgan was up 10%, I think, on Wednesday. It gave some of those gains back, but you still have Bank of America up 8% on the week, Wells Fargo up 8%, Visa, MasterCard up, PayPal up 8%, American Express. So the financials have the outlook of less regulation, more IPOs, more mergers and acquisitions, things like that. Morgan Stanley, Goldman Sachs up 13% and 10%. KKR, so a lot of private equity. So the market is sending the signal of potentially a lot more deals to be done. And obviously Trump's a deal guy, so that's what the market is anticipating. Will that happen? We'll have to wait and see. Tesla, the belle of the ball. Tesla up 30% this week. Pretty euphoric. Nothing's changed with the company. It's just, again, expectations of Elon working with the White House, autonomous being sped up, less regulatory burden on Elon and his businesses, things like that. So a lot of expectations have been built in. So we'll have to see what realizes. But I do think there's another reason for this euphoric run in the stock market, and that is we got through the election without any chaos. That's a great thing. So there's a lot of uncertainty going into the election. You saw the market kind of hitting the pause button, not doing a whole lot for the week or so before the election. That is done. We saw earnings for the big tech companies. Earnings are good. People are saying, you know, clear skies ahead. Let's go. So I think that's another reason why you saw just huge moves in the market. I don't think this is just we love Trump, let's buy everything. I don't think that's it. I think that's part of it. I think there's the certainty and the lack of chaos from this election is what people are looking forward to, on top of really good earnings, AI, and the expectations of more growth coming down the pipe. So Tesla, just, I mean, kind of wild here, just straight up, but looks very constructive on the weekly chart. All-time high for Tesla is 414. Looking good here. But again, nothing has changed with the company's earnings. Tesla's up 30%, but it's also now 30% more expensive than it was at the beginning of the week. So, you know, I'm a big Tesla bull. I'm a big Tesla fan. But nothing fundamentally has changed with the business. We will see if the fundamentals change quarter over quarter when it comes to the earnings, product development, product announcements. But so far, nothing changed this week besides expectations, and the valuation is now much higher. Coinbase, this was a stock I bought last week to kind of throw a kicker in for my crypto portfolio. I do think crypto is going to be a big beneficiary. We did see a lot of crypto senators and representatives get elected. If you are anti-crypto, you're just putting a big target on your back saying, don't vote for me. There was a lot of money thrown around by the crypto industry when it came to politics this election cycle, and it looked to pay off. And Coinbase is one of the biggest beneficiaries of that, in my opinion. But again, nothing has changed with this business, but it is up 30-40% this week. I mean, it was 175 this week, and now it's 270. So it's up $100 a share. That's a huge move, and nothing has changed fundamentally with the business. So some of these stocks are probably getting ahead of themselves. They still need to deliver on the earnings and things like that. So I want to be here and congratulate all the all-time highs. I love looking at the portfolios. It's awesome. But also, the risk goes up when the price goes up, because nothing has changed until the business can deliver better earnings. So this can also drop a large amount in the next earnings cycle if they don't deliver. So I just want to put that into perspective. Pete Carroll always says, I got my Seahawks sweatshirt on. Pete Carroll always says, don't get too high, don't get too low. So when Coinbase is down at 170 or 140 and it looks like the world is over, you know, don't get too high, don't get too low. Focus on the fundamentals of the business, and vice versa. When we're up in the sky here and everything looks great, I'm not doubling down and throwing all my money into margin and going crazy because I think we're going to hit 380 or whatever. Just don't get too high, don't get too low. Focus on the fundamentals. Take it quarter by quarter. Don't do anything crazy. The Qs, all-time high. I had to delete a lot of lines, and I had to close a lot of orders that I had for some bids a long time ago. When we were in this little downturn here, I had other buy targets set up, but I closed all those out. I'm not looking to dollar cost average in the Qs. I'm not really looking to buy a whole lot right now. I'm waiting for a pullback now when it comes to buying. I'm just enjoying the gains. I'm looking to sell some calls on some of these stocks. I do have some covered calls on Tesla and Coinbase just because some of these moves have been ridiculous. Worst case, I may have to roll those out if we keep going. I'm okay with that. Bitcoin looking good. Amazon, all-time high. We finally broke over that 205 level. I do have some very short-term covered calls on Amazon. The premiums suck in here, so I'm not too. This isn't going to make or break anything here, but Amazon really hasn't done a whole lot since 2021. We've been down and kind of got back to where we were. I'm very constructive on Amazon. They did have a big partnership with Palantir, or not Amazon, but Anthropic, their AI partner, had a deal with Palantir, and they're going to work with the government to help the government use AI. So I think that's going to be interesting how they implement that. But Amazon looking strong here. I really expect great things with Amazon, and I'm super excited for the quarter that they guided of 188 billion. Watch my Amazon earnings video if you want to hear more about them. The SMH here, looking kind of interesting because we're not quite near all-time highs like everyone else. Let's see here. How much further do we have to go to get to all-time highs? So we still have another 10% to reach all-time highs. Be very interesting what happens here with the SMH. I know Qualcomm had their earnings, and Nvidia has their earnings coming up here. When is that? November 20th. So that's going to be the next big event for the market. And who knows? Maybe Nvidia reports numbers people don't like, and we see a 5% sell-off in the stock market. Who knows? Maybe they blow out the numbers like I'm expecting them, and we see Nvidia at 180. I don't know. I have no clue. But I would love to buy some more Nvidia if we can get back down in the 125, and then for sure, if we can get back down, I don't think we're going to see 108. But if we do, I will be buying Nvidia on any weakness. Again, this is the craziest chart out there. $14 in 2023. That's $147. And Google, this will be the stock I buy next. I still don't have my full position. I did buy some Google. I don't know if it was this week or end of last week, but I have been slowly nibbling on Google. Their earnings just really impressed me, and I really like what they got going on. If you're watching YouTube, so you know what Google's got going on. So I would like to buy some more Google if we can get back down under 170. I've got about another 20% of the position I need to fill, but I'm being very patient. I'm only buying on the red days. I'm not throwing my cash in. I got time to wait. It's not a big deal. I'm waiting for those red days. Today was a red day, but I want a little bit more downside to buy. But I do expect Google to be a $200 stock within the next 2 quarters. So that's another 10% on the upside from where we're at. So that is my portfolio, and I do want to show the breakdown of how I'm holding these stocks. So this is all my portfolios combined. Tesla and Amazon were almost 50-50, and Amazon's just outgrown, or Tesla has just outgrown Amazon by quite a bit. Nvidia has been the new addition to the portfolio. I did take out Enphase earlier this year. That would be the other stock I look to get back into. This thing is getting killed on the expectations of less solar credits, more drill baby drill, whatever. But also their earnings have not been that good. So the stock over time will reflect its earnings, and we've talked about Enphase in other videos. Go look down my archive to go find my Enphase videos. So I don't know how much more this has to drop, but it's getting to a price point where it's looking attractive. I've had puts on it. I close them out quick when they have a bounce. The premiums just aren't that good to open up more puts, and I don't know if this thing is bottoming here at 65 or if we will visit 45. I don't know. But it's been a great company, but it's just really hit a wall here this year. So I don't know. I know in California, solar will do fine, and we are seeing interest rates coming down. So this is one I'm looking at, but with the stock market going bananas, I'm not an aggressive buyer right now. So that's really all I got for this week. This was a great week to be in the stock market. I did my political video. Go check that out. Here's the portfolio. I'm feeling comfortable with the stocks I have. I'm confident with their earnings, and I'm ready for whatever the market brings us. And for 2024 to wrap up strong and start off 2025 strong as well. So there's going to be, I'm sure, a lot of volatility with the new administration. There'll be a lot of tweets sent out that will make things move up and down, which will be interesting. And it does, to me, look like crypto is ready to make a move. So I'm being quite nimble there. But with this coin position, this is definitely a trade. So it's a big trade I have on. But I'm in the money a decent amount, so I have a cushion. But I will probably put a stop loss at break even, so I will make sure to not lose money on this trade. But I do think the risk reward for my entry on coin is good. So that's really all I got for you guys. Just a big green week. Not a whole lot to do except for just sit there and nod your head and say good. But again, last piece of advice, don't get too high, don't get too low, and just keep getting ready for some opportunities, and don't FOMO in now. The time for buying has been the last few months. Not that there's not opportunities like Google or Enphase and things like that, but I would not be plowing money into Tesla and Amazon at these prices. So that's all I got for you guys in this video. Have a great weekend, and I will talk to you all next week when we get the CPI numbers and whatever else comes our way next week. So that's it. Peace out.